Hey, everybody, we all have some great stock performances this year. I hope. I don't know your portfolio, but I hope that you have had some good ones. The S&P 500 is up by almost 30% year to date total return, which is one of the better years since I've been an investor. I think it's the second best year since I've been investing. The S&P just had.
It is the ninth best year since the Great Depression in the 1930s.
There
So
you and
yeah, it was probably somebody's best year too.
yeah, and I know there were some of the best years were in the post-war years after World War II. I think there were some big years, um, but yeah, it's been a great year for stocks. A lot of people weren't expecting that. Um, I know we did a market prediction video at the end of 2023, and I'll have to go back and watch, but I'm pretty sure 30% gain in the S&P were not on either of mine or Tyler's bingo card for this year.
I think I was like very low returns, but that's my kind of default setting. So
So we're going to get into this in just a second. We're going to talk about our best performers of the year, and why they've done so well, whether we think they're still good investments to look at. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So Tyler actually came up with this video idea. So I had to look what my best performing stock was because I knew I had a bunch that did well, and it wasn't what I thought. I'll give you my top three in order. My third best performing stock of the year is Upstart. It was up about 90% so far as we're recording this. My second best performing stock was Lemonade, the insurance company. That's what I thought my first one was going to be, and that was up about 150% year to date. But my number one, and I knew it was up, but not by this much, was C Limited. Ticker symbol is SE, up 191% as year to date as I'm speaking. And it's up for a couple reasons. If you're not familiar, they are a Southeast Asia based company. Their original core business was gaming. They've since built out an e-commerce platform. It goes under the Shopee brand name in its core markets. They also have a digital finance platform. It's called C Money. It's SEA Money. And now those latter two businesses weren't profitable at first, as you would expect. If you're building out a brand new e-commerce platform, it takes a while to get the profitability. 2022 and 2023 were really bad years for C Limited. And the gaming business is the one that they could always count on being profitable. The reopening trade, meaning like when everything started to go back to normal after the pandemic, that hurt the gaming business. People weren't sitting on their phones playing mobile games anymore, not to the extent that they were in the 2020, 2021 shutdown years. So that hurt the business dramatically. They didn't have that profit funnel putting money into their newer businesses. But the company did a great job of pivoting. They exited a bunch of non-core markets that they had expanded into. There were worries for a time that they were going to beat Mercado Libre in Latin America because they moved into those countries. They exited markets like that. They really focused on expense reduction. I say often that the 2020 to 2021 year, it was growth at all costs for a lot of companies. 2022, 2023 became profitability at all costs, and they really, for companies that did it well, and they really did a good job of that. They cut their sales and marketing costs. Profits returned much quicker than expected. All three of their businesses are growing rapidly now. Just in the third quarter of this year, the revenue in the gaming platform, which everyone thought was going to be stagnant going forward, if you asked them a couple years ago, was up 24% year over year. The digital finance business, C Money, was up 38% year over year for revenue, and e-commerce revenue was up 43% year over year, and it's now the biggest part of the business. So all three businesses are growing rapidly, and all three were profitable on at least an adjusted basis in the third quarter. If you are growing your business, your revenue over 30% year over year, and you're even adjusted profitable, that's a pretty solid combination for strong stock performance, especially when you went from losing money to doing that. Now, the stock has almost tripled this year. Is it still a good bargain? I don't think it's as much of a bargain as it was, obviously. But I mean, the profitability has returned and grown so rapidly that right as I'm recording this, C Limited's trading for less than 30 times forward earnings. With the growth that I mentioned and its profitability, I think that that's a very reasonable multiple to pay at this point. So I don't necessarily think it's an expensive stock. It's just not as attractive as it once was. Tyler, what was your biggest home run this year?
Well, I don't have the as impressive type of returns than some of the ones that you did. And actually, the funny thing is my best performing stock is one that I actually bought in May. And even though I bought it halfway through the year, it ended up being the best performer. And that's Emcor Group. I bought it in May. It's up a little bit over 33% for the year, which doesn't sound great, but on a year to date basis, the stock's up over 120%. So I guess maybe I should have taken my advice a little bit earlier. One of Emcor is one of the nation's largest electrical and mechanical contractors in the U.S. Repeating myself. So when we mechanical is like HVAC, mechanical systems. Basically, if you're building a manufacturing facility, if you're building a data center, or you're building a I don't know, an auto manufacturing plant, I guess. There's basically kind of like a touch on a lot of like big themes that we've seen in terms of the macro economy. The push for AI. AI means data centers. The push towards nearshoring. So that means a lot more manufacturing and supply chain requirements in the United States. So manufacturing facility, warehouses, things like that. Basically, like a boom in construction. And if you look across the industry, that we have had a boom in non-residential construction to accommodate a lot of these things. It seems like for the past couple of years, we've just had news story after news story of new chip plants being built, a new automotive manufacturing facility, trying to like reshore some of our critical mineral supplies and battery manufacturing. All of these are kind of like a rising tide lifts the boats of construction, and specifically electrical mechanical, because it tends to be one of the things that benefits much more so when you get into like say an advanced manufacturing facility. I think I saw an interesting statistic where it's like 55% of the cost for an AI data center it's in the electrical and mechanical of the building itself. So when you see all these multi-billion-dollar projects to build out data centers, these are the people who are going to make a lot of money doing it. Like I said, it's been a great year, and despite that, the stock still only trades for about 24 times earnings, and that just kind of goes to show with the type of earnings growth that we've seen in the last couple of years. Now, for investors, I do want to be clear: electrical and contracting can be a cyclical business. New construction is going to wax and wane with kind of the broader economy, and maybe some of these investing themes or macroeconomic themes I was talking about might start to fade. But there's some other aspects to it, because when you build facilities, you also have to maintain those facilities, and part of electrical mechanical contracting is kind of the ongoing maintenance, and so you do get a little bit of a built-in base of work to go there. But overall, I think I think this is a company that even going into 2025 and perhaps beyond, I don't see a significant shift away from a lot of these talk about AI growth, the demand for all of these things. I think there was just a recent announcement, I think it was between Taiwan Semi and NVIDIA, about a new chip manufacturing plant in Arizona. I mean, it's rumors right now. So, but it kind of just goes to show like what's been going on in this industry, and very indicative of kind of those behind the scenes AI plays that have been doing spectacularly well, and I think might continue to do so.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.